man, if this happens, a lot of us are going to think it's the bottom, right? Like, because it's going to be like, all right, 4 years, like November, December, January. And then I would say, worst case scenario.
Cryptocurrency is in bad shape, ladies and gentlemen. You certainly don't need me to tell you that, although if you subscribe to either myself or Benjamin Cowen's channel, surely you are pretty in tune with what is going on in the cryptocurrency space. Well, in today's video, let's talk about cryptocurrency's bottom, the worst case scenario. Let's keep things real. Let's keep things real. It's possible we see a worst case. So if we do, what is the worst case scenario for cryptocurrency? Here today is nuclear PhD engineer. He worked at NASA. Now he is the CEO and founder of Into the Cryptoverse, his own YouTube channel and platform. Ben Cowen, how are you doing today?
Pretty good. Pleasure to be here as always. And always a reminder to my own subscribers, if you're new to Altcoin Daily, make sure you subscribe down below.
Awesome. Before we jump right in, anything new with you? Anything you want to share before we dive in?
We're going to have our fourth child next month. So that should be interesting. Maybe, December will be some new life in my family. Maybe we'll also see some new life in the cryptoverse by then.
A little hope. Well, we look forward to baby Cardano joining us in the world. Anyways, Ben, let's jump right into it. What do we need to understand about crypto markets today?
Yeah, so I feel like there's a lot of lessons we can learn from like investors a generation ago. So, there are a lot of people that went through the dot-com crash and it was brutal, and I look at the chart and I'm just like, wow, like, think about how many times they must have thought the bottom was in before the bottom was actually in. And there are a lot of similarities between the dot-com crash back in the early 2000s and the crypto crash we're currently seeing today. And we've sort of followed this for a while now. And now that we're, that Bitcoin has recently put in new lows, I think it's still worthwhile to consider this potential scenario. So if you go look at the NASDAQ back in 2000, you'll notice that it peaked. And then after its peak, which also, by the way, if you just look at the dot-com stocks, it was peaked at around 3 trillion, which is basically right where crypto peaked in 2021, right around 3 trillion. But after that, the asset class as a whole retraced about 84% or so. So an 84% retracement from the all-time high. And that seems like it's pretty standard, right, for crypto. I mean, we don't need a dot-com bubble necessarily to get to that level. We've seen that in multiple market cycles, but I want to explain why this scenario could in fact play out for the cryptoverse. What you may notice is that this was an 84% drop, but in the drop is what I want to focus on. There were so many bear market rallies, right, every step of the way that made people question if the bottom was in. And you'll notice that early on, just like with crypto, we had about a 40% rally in the NASDAQ after the bubble popped. If you go to the total cryptocurrency market cap and you think back to January, February, and March, we also had, right, a 40% rally or so to get everyone excited again and think about, okay, like we're just going to go back up higher. And we didn't, right? We ended up dropping more. And then, the NASDAQ had, there were some smaller moves back in here, but the next big one was a 50% move back up to the upside. And then I think, well, have we experienced a 50% move back up to the upside in crypto recently? And of course we have. And if you go look at the relief rally that we got from July through August, you'll notice that the total market cap increased just over 50%. So from here, what I'm really watching in terms of, is it going to continue to follow this or not, is the next step for what the dot-com crash did. The next step was to then go 20% below that low, right? A 20% move to the downside. And then subsequently a 60% move back up to the upside. So this is what I'm watching really closely because look, you guys have been around crypto forever. We saw a major bottom in December of 2018. We also saw, you can look at the chart anyways, we saw a major bottom in January of 2015. So we know we're kind of in bottoming season, right? Like these are the months during the bear market, like, November, December, January. We are getting into that phase where historically the asset class bottoms. So what I'm really looking for is if it's going to follow what the dot-com crash did, you're still looking at a 20% move to the downside from the most recent low. And that would put the total market cap here, if we take 20% down, puts it at around 610, 620 billion or so. So, and from the current levels, that's not even that much further down. I mean, we're already at 746 billion, right? I mean, that's just a Tuesday for total market cap to drop down that low. So I think what I'm looking for as we get into the end of the year is how deep does it go? Is it a shallow low where we only marginally drop just a little bit lower and then we get a major rally? Man, if this happens, a lot of us are going to think it's the bottom, right? Like, because it's going to be like, all right, 4 years, you know, like November, December, January, that could be the bottom. And that's been my speculation all along, is that, you know, at the next low, past the June low, we actually have a real case that that's the bottom, and we don't have to look back. I think the real main concern is just how deep does it go? And I would say if total market cap goes ahead and corrects down sort of this final extent and gets us maybe somewhere between that $400 to $500 billion level, which, by the way, if we go to the $400 to $500 billion level, that gets us to the lower bound on our total market cap regression line, right? Like, so that would get us down here at the lower part of this green line, which we tend to touch every few years. If we go ahead and see that correction over the next month or two, I think there's a real case to be made that the bottom is in, right? Like, I think we can make the case that the bottom is in. If, on the other hand, it's a very shallow correction, and then we get some type of like face melting rally back up to the upside where, you know, everything goes back up 60%. Here's something interesting. If we drop 20% down to 600 billion, 620 billion, and then get that 60% rally back up to the upside, that puts us right back at about a $1 trillion market cap. So I think that's really what to look for. And, you know, I think the worst case scenario for total, just to sort of summarize, is probably between the $400 to $500 billion range. I think that what's not clear is exactly how long does it take us to get there.
But you think, based on comparing it to the dot-com bubble of the 90s, if it were to follow something similar to that, then there needs to be lower prices?
Yeah, I think so. I mean, I think one of the reasons that's the case is because I think I think a lot of that could actually come from more so the altcoin market. I think Bitcoin is probably a lot closer to a bottom than some of the altcoins are. I mean, we saw how bad the altcoin market got back in 2018. I mean, you know, you're talking about coins, you know, Cardano, which is one we both talk about some. I mean, it went down almost 99% in 2018. And I mean, like, you know, like, I don't think people recognize that there's a huge difference between like a 90% drawdown and a 95% and a 99%. You know, Solana is down 96% almost, right? Ethereum is down, I don't know exactly, but I know it has gone down 80% at one point when it went down to like 880. So I mean, these altcoins can get absolutely wrecked at the very end of bear market. So I do think there's a good case to be made that a lot of the drawdown, while it still could easily come from Bitcoin to some degree, I think a lot of it still remains in the altcoin market.
And why compare cryptocurrency to the dot-com bubble?
Well, I mean, I think to some degree, look, there are a lot of similarities. First of all, a lot of quantitative similarities too. They both peaked at 3 trillion, but fundamentally, I mean, you're back in the dot-com crash, we were looking at a lot of like companies that, you know, their valuations were just like, you know, insanely above what they should be. They weren't really making any money. They didn't really have any utility. You had pets.com, right? I mean, that just went to zero. And we also had the dot-com bull, where basically the dot-com, that industry took over the Super Bowl. Everyone got excited about it and YOLO'd in, and basically ended up being the exit liquidity, you know, for the people that wanted to get out. And I think we kind of saw something similar this time too. We had the crypto bull, where a lot of these major platforms took over the Super Bowl. And we had that January, February, March pump, where I think a lot of people just took that as the opportunity to get out, and if they missed it back in 2021. And so, you know, I mean, look at where we are today. Everyone uses the internet, right? Like, everyone uses this stuff. But what did it take? It took that major 84% crash. It took going sideways for a while. And it took a long time before it was integrated into our lives. So I think crypto is probably going to follow a similar path. I mean, I think 20 years from now, we're all going to be using cryptocurrency, and we're probably not even going to think about it. I mean, like I'm on a Mac right now. I don't care what you're on, right? Like you could be on a Mac, you could be on a PC, you could be on anything. Like it doesn't really matter. And that's the point with crypto. In the future, we might not care so much about like what network it is. It's probably not going to be that obvious to people. It's just going to be like, oh yeah, like who cares if he's using this one? There's so many bridges in between that it doesn't matter what they're using. There's going to still be interoperability there. So that's the reason why I compare it. I just think that, we as humans, we like to front run everything. So we see the potential for it. We get a little bit ahead of ourselves in terms of actually what the utility is. We then come back down to earth. And then the people that see the vision, they build throughout the bear market, and they pave the way for new utility in the next bull.
Totally. You want to take us off screen share? I think they say that people tend to overestimate the growth or the price appreciation in the short term, then underestimate it. Maybe it's the adoption in the long term or something like that.
Right. Yeah. I mean, I think a lot of people underestimate, or they overestimate how far it'll go in the short and underestimate the long term. Because I mean, things over the long term. I mean, look at, if that NASDAQ chart, I mean, think about that peak we had back then. We've completely eclipsed that now, even with the most recent drawdown. Like we're still well above that peak from the .com era.
Totally. One of my final questions, Benjamin, because we talked about the total crypto market cap, which I like because it talks about the whole market. But let's get into the two coins that'll probably definitely be here in 5 years, Bitcoin and Ethereum. How low do you think, just how low do you think they could go? Nobody knows the future.
Yeah. So I can say like how low I think, and then I can say kind of like a worst case scenario. And the worst case scenario would be, depending on how bad this potential recession ends up being, like it's hard to know exactly how that's going to affect crypto. But I would say for Ethereum, the main levels that I'm watching are the $400 to $600 range. So I don't know if it's going to go all the way down to 400, but I do think a $600 ETH is potentially in the cards, mainly because, I think there's a lot of evidence to suggest that it's about one cycle behind Bitcoin in terms of its volatility. Its first cycle, it saw a 95% bear market, and Bitcoin's first bear market was 94%. Bitcoin's second bear market was around 87%. So if Ethereum goes 87% down from its all-time high this time, or even 88%, that's going to put it at just below $600. So I think there's a case to be made that Ethereum could have this like final capitulation down into the $400 to $600 range, spend some time accumulating there, for a year or something, maybe in 2023. And then we hopefully go back up in 2024, 2025. So I'd say that's probably for Ethereum. Could it get worse than that? I mean, I think anything's possible. It's hard for me to, I can say I wouldn't be sitting on the sidelines at that point. If it's in the $400 to $600 range, like I think that's where you just hope, hope it sticks. For Bitcoin, I don't think it has to drop nearly as much as some of these other altcoins for it to actually be at a bottom. I think you could make a case. The main indicators that I'm still looking at that it needs to trigger are things like Bitcoin normally has a daily close below its balance price. Right now, the balance price is just at 15K. And so that would tend to make me think that we need to go below 15K at some point. There's some other indicators like the Peel multiple, which are at like 0.5 or something. They tend to bottom at around 0.3. I think there's a good case to be made that the bottom's somewhere between 10 to 14. And that would represent like an 80 to 85% drawdown from the all-time high, which is pretty typical for Bitcoin, right? Like this is pretty standard. With that said, I mean, I don't think it necessarily makes sense to just completely sit on the sideline hoping for those prices, because they may never manifest. And then I would say, worst case scenario. So I would say my base case is probably somewhere in that 10 to 14. Worst case would be going sub 10. And that would just be, I think the only way we get there is just, like if we get some crazy nasty recession or something and everything goes lower than people think it will. But it's not my base case, it's just the worst case.
Ben Cowen, thank you so much for sharing your realistic perspective with us today. The moment, things in cryptocurrency change all the time, there will come a point in the future where we can look back and be like, Oh, I think that was it. I think that might have been the bottom. Make sure you subscribe to myself and Benjamin because we keep you updated on a regular basis. Benjamin, final thoughts for the Altcoin Daily audience.
Yeah, final thoughts are basically, price-based capitulation is one thing, but I think the more important thing is time-based capitulation. It's not always about how far down it goes, but it's just about how long does it take to get there. And that's the hardest part, I think, for people to get through, is just like they give up, right? Like they throw in the towel. They say enough is enough. But again, the secret, like you and I have seen multiple times, is just stick around, right? Like see what happens. Stick around no matter what. And normally crypto will pleasantly surprise you eventually. It rewards the people that stick around and the people that kind of leave. So I would say, no matter how low the price goes, whether the bottom is in or not, I think we are probably in like the last third or even the last fourth of the bear market, right? In terms of time. So I don't think we have that much further to go, but we always know the very end can be very difficult. So I would say just hang in there. We'll get through it, and then there should be plenty of good times ahead.
Appreciate it, Benjamin. Thank you so much.
Thanks for having me on.